Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Asian stocks post modest gains as traders await the release of key US inflation data later this week. Fed speakers Bostic and Goolsbee differ on rate cut expectations. Russian President Vladimir Putin has, for the first time, said Islamist militants carried out the deadly Moscow attack, but he still accuses Ukraine of involvement. Plus, Boeing starts the search for its next CEO after a leadership shakeup as it seeks to reassure airlines and passengers that its planes are safe. Let's check in on these markets then, checking in on the futures after some modest losses across the US on Wall Street last night. By the end of the close yesterday, losses of around 0.3% on the S&P and the Nasdaq. Here's the futures set up then. When you look to the US, you're looking at gains, modest gains of about 0.1%, 5,286 on the S&P futures. Nasdaq futures 18,545, pointing to gains of around 0.2%. European stocks actually notched up fresh highs yesterday in the session. You're now up about 15% for European stocks in the last 12 months. You're currently flat across European futures. UK futures, FTSE 100 futures pointing lower by 0.3%. Let's flip the board and look cross-asset then, with the focus, of course, on what's happening in the treasuries and in the yield curve. And that conversation and that debate in terms of the steepener trade continues. 4.58 now on the 2-year, a move lower by 3 basis points so far in the session. Euro dollar at 108, currently down 0.1%. Brent $86 a barrel. It saw the biggest pop in prices, Brent, yesterday in about a week. $86 a barrel. OPEC Plus, of course, their decision as to whether or not to extend the cuts will continue to be in focus. And gold remains at around these record levels, 2,172 per troy ounce on gold, just up very modestly in the session. That is a story going to be unpacking through this hour, the catalysts driving gold higher. OK, let's check in on the Asian market session then. We talked about the mixed picture that we're seeing, or the modest gains that we're seeing. Let's cross over to Avril Hong. We're standing by in Hong Kong, in Singapore, I should say. Avril has not moved jurisdiction, which is a relief for us all. Avril, what are you looking at across these Asian markets?
Yeah, I'm not in Hong Kong, but I can take you through what we're seeing on the Hong Kong benchmark. I mean, for the Asian stocks, it's very interesting how we saw it erase gains early on in the session, then climb back up again. And this seems to be a bit of positioning, but the Chinese lenders are also in focus. I'll get to that in a bit. Overall, though, it seemed at one point during the session that traders were turning more cautious. Don't forget, we're heading into the end of the quarter. We also have US inflation data coming up. So there's that caution creeping in, and some analysts point out that today we're seeing the laggards on the Japanese benchmark, the Taiwan benchmark. These are also the gauges that have been outperforming this quarter. So it could be a case of investors just looking for new catalysts. The Kospi, the outlier lifted by the local chip stocks. Let's take a look at the big movers in these indices. As I said earlier, it's the Chinese lenders. Coming into this week, there was a lot of pessimism about the mega banks in the country because of how they've been increasingly leaned on to support the property sector. Chinese bank China Merchants actually beat on its earnings, so that seems to be lifting the broader financial-related stocks in Hong Kong. We have Nissan going the other direction today as it unveiled an aggressive plan to go head-to-head with the likes of BYD, something that investors not cheering on. It's one of the biggest drags on the Nikkei today, losing by the most in about 6 weeks. SK Hynix, as I said, the local chip stocks lifting the Kospi. Let's take a look at what we're seeing in the currency space because, of course, there's that story of dollar resilience that's putting more pain on the yuan and the Japanese currency. We're seeing intervention chatter, keeping a floor on the Japanese yen. And today, the PBOC signals from that fix also seem to put a bit of calm and certainty for yuan traders, but note here that divergence also could be a signal that the yuan bears are not terribly convinced. Of course, we're going to be watching out for the Fed amid all this. Tom.
OK, Avril Hong in Singapore. Thank you very much indeed for the check on the markets. And Avril, of course, mentioning and flagging the Fed. And we have been having those speakers out overnight, of course. Fed Governor Lisa Cook says the US central bank must be cautious in cutting interest rates. Policymakers held at their meeting last week, of course, and maintained their forecast for 3 cuts this year. But the US economy has continued to surprise with its strength despite high borrowing costs.
The risks to achieving our inflation and employment goals are moving into better balance. The risk of easing monetary policy too soon or too much is that it could allow above target inflation to become entrenched and halt the progress that we have seen.
OK, Lisa Cook, who is a voting member of the FOMC. Let's bring in Mark Cranfield then from Bloomberg's MLive team. We also have Raphael Bostic reiterating his view, of course, Mark, that he expects it more likely that they cut just once in the year this year. How are bond markets then reacting to the Fed speak, Mark?
I'm getting a lot more cautious. It's just a week ago that everyone was so euphoric after the FOMC and Jerome Powell's press conference. That everyone was so dovish. It sounded great. The Fed was keeping to 3 interest rate cuts this year in the dot plots. Jerome Powell was reinforcing the message that rates are definitely coming down this year. And here we are. We've had some few pieces of strong data. We're already getting some pushback. Mr. Bostic saying only 1 cut is necessary this year. Others saying they're not quite sure. Maybe it's 2, maybe it's 3. And we've got loads of important data. As you were saying earlier, the big one is the PCE, which comes in at the end of the week. Interestingly, the market reaction to that could really be a bit large because it comes on Friday. Most of the world is on holiday. US bond market will be at subpar strength. The data will still come out. And then on Monday, still a lot of Europeans are out as well. The market reaction could be quite large, especially early in Asia. Treasury futures will open with Australia closed and other people out as well. And well, the chances of a big reaction if we get a high number is pretty large there. So traders are really quite cautious here. We've got an inverted yield curve as well, which has been there for a record period of time. Everyone is dialing back a little bit. They're not quite as optimistic as they were just a week ago.
Yeah, how times change, as you say, in the space of just a week. So hold on to your hats for that potential rupture when it comes through for PCE on Friday. Potential, of course, but the market reaction, as you say, could be pronounced. That's really, really interesting as we look ahead to that. So we talked about the mixed views coming through from these Fed speakers, or at least the caution that's coming through, slightly at odds with what we've been hearing from Jay Powell. We look at the comments coming through, the analysis coming through from strategists at JP Morgan and Morgan Stanley warning that equities are looking quite rich at this point in terms of the valuations. What does all of this mean then for the stock markets and for FX as you fold all of that in, Mark?
For the equity market, they're more likely to take it in their stride than anybody because the equity market has already factored in that US interest rates are not going to rise. As long as the Fed keeps to the promise that at least the next move will be down. It doesn't really matter whether the next move comes in the second quarter, third quarter, fourth quarter. As long as yields don't go much higher, equity market has factored that in. The American economy is strong. Job situation is very good. Companies are making money. And there's an AI story on top of all that. So equities are probably in the best place to continue to do what they're doing, regardless of how the short-term data comes out. The one that could react as well as the bond market is the currency market. We've already seen reasonable amount of dollar strength. Dollar yen is pretty close to the areas where Japan intervened before. You can see that China's been back and forth on whether to allow a weaker currency or not. There's a lot brewing in the currency market. Any reason that gives the US dollar more strength in the short term could have big repercussions across emerging markets and across G10 as well. That's where the real action could be next week. And volatilities are relatively low. So even easier for traders to come in and take short-term momentum plays. We'll be watching foreign exchange very closely.
OK, the eagle eye then on the G10 FX space. Mark Cranfield from our MLive team, thank you very much indeed with the breakdown of the potential market implications of all this Fed speak and the positioning around the next cut, or at least the first cut in this cycle to come through for the Fed. Now to the major corporate story at the moment, really, which is what's unfolding at Boeing. We saw this towards the end of the day yesterday. Boeing shares then closing higher after the plane maker announced a sweeping leadership overhaul. CEO Dave Calhoun, of course, stepping down at the end of the year. That was the major announcement out yesterday. Commercial Planes Chief Stan Deal is leaving immediately, while Chairman Larry Keller will not be standing for re-election. For more on this, let's bring in Bloomberg's Katrina Nicholas for the details. Was this, Katrina, ultimately then inevitable, given the challenges that Boeing was facing?
Yes, I think it was. And I think, what you're seeing here is Boeing customers finally getting what they've been wanting really for some months now. This all came to a head over the weekend when the CEOs of Boeing's three largest customers in the US, American Airlines, Southwest and United, pressed Boeing directors for a meeting to air their concerns without Boeing CEO Calhoun there. So that's quite telling that they wanted to speak to the board without the man at the top actually present. So even though these leadership changes were formalised over the weekend in that board session, they have really been discussed for quite some months behind the scenes, particularly after the near catastrophic accident that we had on Alaska Airlines back in early January, where that door plug blew out. Directors wanting to signal this overhaul, we were told, ahead of the company issuing its annual proxy statement, which was already delayed by several weeks. So, as you said, Boeing Chief Executive Officer Dave Calhoun stepping down at the end of the year. The chairman, Larry Kellner, saying he won't stand for re-election, and Stan Deal, the embattled chief of Boeing's commercial airlines division, saying, the airplanes division rather, saying that he is going to be stepping aside immediately and he's going to be replaced by the chief operating officer, Stephanie Pope. So this is really a complete overhaul. I think investors, you mentioned the shares are up, they're not seeing this as a sort of knee-jerk reaction. They're seeing this as an opportunity for Boeing to really set the slate clean, a complete reset, and really work hard on changing the company's culture and rebuilding investor confidence.
So a complete reset, and those challenges are, of course, acute. What are the key challenges that stand out to you that the next CEO will face?
Well, I think, one Bank of America analyst put it quite well when he said Boeing has really been on the reactionary defense for quite some time now. And this is a chance for a long time to really reset the narrative. The focus, of course, will now shift to who will replace the CEO at Boeing. We're hearing that could be a number of candidates for the top job, including Stephanie Pope. Even though she's just been elevated into Stan Deal's position, she still is in the running, we're told, to have a shot at that top job. Other names that are coming out include General Electric CEO Larry Culp, Patrick Shanahan, who's the CEO of one of Boeing's biggest suppliers, Spirit Aerosystems, as well as Greg Smith, who's currently the chairman of American Airlines, and he also used to be a former Boeing finance chief as well. But whoever gets the first job, first and foremost, they're really going to have to work hard on rebuilding that customer trust. I mean, this is an airline, a plane maker rather, whose fleet is quickly turning into a meme. I mean, you can find websites out there now advising the flying public how not to fly a Boeing jet. So really needing to rebuild that confidence both among customers as well as the flying public. And this has also become a strain on Boeing's finances as well. So it's something that, if they get the right person in the job, that investor confidence can be restored. That's also going to be a good thing for Boeing's balance sheet.
Yeah. Sounds like a brave man or woman who will be taking over as CEO of Boeing. Bloomberg's Katrina Nicholas, thank you very much indeed on that, of course, crucial story in the airline space as well, with a focus on Boeing. The day ahead now, some other factors to think about today. We're going to get US durable goods orders and data. That comes through 12:30 p.m. UK time. So again, a bit of a gauge in terms of the health of that part of the US economy, particularly the manufacturing sector, how much demand there is domestically and externally. When it comes to EM, focus on the Nigeria rate decision later today. They're expected to hike again, and quite substantially, given the inflation challenges of that country. Inflation running at around 32% for Nigeria. So look for that as the central bank action within the EM space, Nigeria. And meanwhile, back to the US, another auction of 5-year notes. That's at 5 p.m. UK time, and we'll be watching for the appetite from investors to absorb that auction. So that's at 5 p.m. UK time. Coming up, Vladimir Putin blames Islamists for that Moscow terror attack for the first time. as more arrests are made. We're going to have the latest. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, the Russian President Vladimir Putin has acknowledged for the first time that Islamists were to blame for Friday's terrorist attack in Moscow. The number of people killed at the Crocus City Hall has now risen to 139. Let's bring in Bloomberg's Tony Halpin then for the details. Tony, Putin is, though, still trying to link Ukraine and the West to this attack. Why does he continue with this line? ISIS-K have come out and said it was them. US intelligence saying it's very likely, almost inevitable, almost certain that it was ISIS-K. Why is Putin continuing then to try to tie this line between these terrorists and Ukraine?
Yes, good morning, Tom. Well, as you said, he did finally acknowledge that Islamist extremists were involved in this attack, but he persisted, as you say, with the Ukraine line, that even in the face of no evidence, he didn't present any additional evidence either, in a fairly rambling speech justifying his case. And essentially it's because he's trying to give support or get support for continuing the war, and to make it appear that Russia is somehow under attack both internally and externally, to try to rally public support for whatever decisions the Kremlin is trying to prepare the public for in Ukraine in the nearest future. It's a matter really of also saving face. He just doesn't want to appear to have made a mistake, and so he's doubling down on his argument.
What is the latest, Tony? Get us up to speed on what is unfolding on the ground in Ukraine in that conflict. Where do we stand?
Well, there's very little change, it has to be said, on the front line. A few kilometres here and there, Russia's making advances. But the aerial campaign on both sides has been intensifying recently. Russia has been continuing bombardments of Ukrainian cities, knocking out energy infrastructure, in particular in places like Odessa and Kharkiv, and including also the capital Kiev. And overnight, the governor of Russia's Belgorod region, which borders Ukraine, said that air defences there shot down 13 drones. So although there's not much movement on the ground, there's a clear intensification of the air war every day.
OK, Tony Halpin, thank you very much indeed on the latest in terms of what we've been hearing, of course, from the Russian president in relation to that terrorist attack and how things are unfolding, how that conflict is unfolding, of course, on the ground in Ukraine and the stepped-up air war. Thank you for the latest. Now, the Israeli government has called off a US trip by senior officials. That's after Washington decided not to veto a UN resolution demanding an immediate ceasefire in Gaza. A decision reflecting a shift of approach by Washington. 14 of 15 UN Security Council members voted in favour of the resolution. The US abstained, citing the measure's failure to explicitly condemn Hamas for its October 7th attack on Israel. Coming up, we're going to explore the impact of record-breaking cocoa prices. A look at soft commodities next. This is Bloomberg.
We anticipate that inflation will remain at slightly elevated levels. Just given where global inflation developments are, so we don't think that we are going to see inflation moderating fast. And then on currencies, I think the Naira uncertainty we spoke about has been pleasing to see in a market like Ghana. We're starting to see inflation come down and the cedi becoming a lot more stable. So that uncertainty is much more about, the continent more general. We do have elections in South Africa. We have elections in Rwanda and also in Ghana. So three of our key markets have elections. But within the context of elections ongoing, we think the investment case remains very robust. The demand for data and fintech services remains very, very strong when you see the underlying traffic growth that we're seeing in these markets. So we will, work to navigate any kind of the geopolitical, context that we're operating in, over the next 12 months.
OK, that was the MTN CEO speaking to Bloomberg's Jennifer Dabasaja after Africa's largest mobile carrier reported its biggest drop in profit in at least 30 years in the wake of the devaluation of Nigeria's naira. Now, to soft commodities, and cocoa has exceeded $9,000 for the first time ever as global supply shortages grip the market and chocolate makers grapple for beans. Yesterday alone, futures gained $700 per tonne, climbing for a fourth straight day. Let's bring in Bloomberg's Ondiro Ogunga for the details on this story. Joining us out of Johannesburg. Ondiro, what is driving then this historic rally in cocoa prices?
Tom, we're seeing also a record high shortage in cocoa beans hitting the market. Take Ghana, for example, 2023-2024, they're going to record 650,000 to 700,000 tons, and this is way below the projected 850,000 tons. Ivory Coast is also going to report a shrinkage in the mid-crop season, a season that the market was hoping would bolster supply of cocoa beans in the market. And I mentioned these two countries because combined they produce about 65% of the world total cocoa beans. And a couple of things can explain this drop. One, climate change. There was delay in rainfall, and when the rains came, they flooded majority of cocoa farms. We're also seeing financial constraints in countries like Ghana, where the government was not adequately able to subsidize fertilizer for farmers. Outside of this, we are also seeing that that there are new incoming rules in Europe that are going to block cocoa that is coming from countries that destroy forests and have child labor in their supply chain. So all these factors combined are increasing the shortage in the market, but also driving up prices.
OK, so what are these the changes with the international market then? What do they mean for Ghana? What do they mean as well for chocolate producers globally?
It's not good news for Ghana, right? Because a third of their revenue, particularly, has fallen from cocoa because this year they're projected to make about 508.4 million. And cocoa is the third highest FX earner in Ghana. So what happens when these inflows drop is that external payments are going to suffer. This puts pressure on the cedi, and this is a currency that has lost about 8.3% of its value to the dollar. In turn, inflation then suffers, and Ghana is a country that has seen record inflation of about 54%, the government working very hard to bring it down to about 23%. Factories are also struggling. They're operating intermittently. When they have cocoa beans, they're operating. When they don't, they shut down, and it's only a matter of time before we begin recording job losses. Farmers are also now opting to smuggle their beans outside of Ghana because prices are capped at the beginning of the season. For chocolate producers, good news and bad news. They make a little bit more money because chocolate prices have gone up. But then again, it bites down to their profit because the prices of cocoa beans continue to rise due to the shortage.
OK, excellent context. Bloomberg's Ondiro Ogunga, thank you very much indeed on those record high cocoa prices. And cocoa's record-breaking surge is the main focus, by the way, of our next episode of Bloomberg Africa Amplified. We're going to take an in-depth look at what is behind the cocoa shortages, unpack a lot more of what Ondiro's been telling us, and why there could be a full-blown chocolate supply crisis, just of course ahead of Easter. That's Africa Amplified next Friday, April the 5th at 5:30 a.m. UK time. Now, Senegal's new president-elect has pledged to tackle corruption and use the country's resources to better the living conditions of the population. 44-year-old Bassirou Diomaye Faye, a largely unknown former tax inspector, rose from prison to win this weekend's election. Faye says he plans to strengthen state institutions and maintain friendly relations with Senegal's partners. Plenty more coming up. We're going to focus on gold. Stay with us. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. These are the stories that set your agenda. Asian stocks post modest gains as traders await the release of key US inflation data later this week. Fed speakers Bostic and Goolsbee differ on rate cut expectations. Russian President Vladimir Putin has for the first time said Islamist militants carried out the deadly Moscow attack, but he still accuses Ukraine of involvement. Plus, Boeing starts a search for its next CEO after a leadership shakeup as it seeks to reassure airlines and passengers that its planes are safe. Let's check in on the futures then. Modest losses across Wall Street yesterday, down about 0.3% on the S&P and Nasdaq futures, or the Nasdaq as well. Currently, though, US futures grinding a little higher, pointing up by about 0.2%, so making up for some of the losses of yesterday as things stand. That's the futures picture stateside then. Here in Europe, you got fresh records yesterday, and for the context, you're up on European stocks across the benchmark about 15% over the last 12 months. Fresh records yesterday. Currently, though, European stock futures are flat. FTSE 100 futures currently pointing lower by 0.3%. Look to iron ore and the miners potentially on that story. Iron ore prices are tumbling in the session so far today. 7,926 flagged for FTSE 100 futures. Let's cross the board, flip the board and have a look cross asset then. We saw a bit of movement then across the Treasury curve. We are still weighing up these comments from Fed officials. We have that crucial PCE, personal consumption expenditures data, out on Friday. A little bit of caution coming through from these Fed speakers after the relatively dovish comments from Jay Powell last week. The US 2-year at 4.59 right now, move of 3 basis points. Euro dollar 108, currently down up 0.1% on the single currency. Brent, after posting one of its best days, the best day in a week yesterday, gains of a little over 1.5%, close to 1.5% on Brent yesterday. $86 a barrel currently on Brent. OPEC Plus expected to continue to push those cuts. They are meeting next week, so we'll look ahead to that as well. Gold continuing to stay at around these record highs for gold, the precious metal, currently at 2,172, relatively flat in the session, but we'll unpack that story in more detail for you in the next couple of minutes. A couple of redheads, though, crossing the board right now. One is on France and the deficit there. We'll get to that shortly. But first, Atos saying it has entered conciliation to reach a refinancing deal. So Atos, of course, over in France, the IT company, getting closer, it seems, to a refinancing deal, announcing that it has entered conciliation to reach that refinancing deal. So maybe a step forward as it attempts to address some of those challenges. So it started an amicable conciliation procedure with its creditors, according to the detail that has just crossed. And you can see the pressure that's come through on that stock over 1 year. Atos currently down over that time frame. A little over 86%. Back to France, though, and the budget deficit. A redhead crossing again in the last minute or so. France's 2023 deficit of 5.5%. 5.5% of GDP, well above the government's target of 4.9%, and really raising a question as to what the French President Macron is going to have to do to ensure that he can rein in that budget deficit. Again, well above the target, 5.5% of GDP in 2023. Let's get the details and bring in Paris Bureau Chief Alan Katz now for the latest on this. Alan, how bad is this then for Macron? How did we get to this point?
Well, it's certainly not great for him. The difficulty is that he has really pledged to reduce the budget deficit over the next several years back down toward that 3% level. And so what this is going to require is that they do some significant spending cuts in order to try to sort of get the deficit going back on track. Right now, it's really going quite the wrong direction, and they really got to get an inflection to get it headed back down toward the way they need it to go. And he's promised, or his finance minister certainly has promised, not to raise taxes in the past. And the question is, are they going to be able to stick to that promise or not? Because if not, if they do stick to that promise, then it really is going to require some major spending cuts, and that's never an easy thing to do. Who do you cut? What do you cut? It creates a lot of grumpy people if you start really cutting expenditures, especially in a country like France, which is so dependent on government spending as a proportion of GDP.
I can't believe you just clumped grumpy people in France together, Alan. And I say that as someone with French heritage. Alan, what are the other possibilities? Are there other levers that Macron can reach for? And in terms of the domestic politics, how does this play out? Where is most of the pressure going to come from politically for Macron on this issue?
So the other lever is tax increases. And that has come up. It came up in particular this weekend as a possibility. There was an argument from one of Macron's political allies to say that they should tax what they call the super profits of some companies. That's something that has been considered in France before and rejected, in part because how you define those super profits is very difficult. But it has come up again as a possibility. If you do that, what does it mean? Well, it means you hit companies like Total, the big oil company, or perhaps you hit pharmaceutical companies or banks. If they're making a lot of money, you could imagine all sorts of different companies that could get caught up in that. The question is, do they make enough money? Are their profits high enough? How would they be hit? How would it be defined? And would that really essentially violate the pact that Macron has created with business, which is to say, I'm going to create a stable, business-friendly environment, and I'm going to attract companies and financing and investment to France, which he's actually done quite successfully since 2017 when he was first elected. And to suddenly make the turnaround now would be quite difficult. Now, the other thing, as you point out, politically, is if you start raising taxes, if you tax companies, that's one thing that creates a lot of difficulty for example, people who watch Bloomberg TV or read Bloomberg News. It creates less difficulty for your voters. If you start taxing individuals, that creates a lot of difficulty. In particular, even discussing this creates difficulty in the run-up to the European elections in June, where Macron's party is already behind the populist right National Rally Party.
The unenviable choices, then, for the French president on this important news. Alan Katz, Bloomberg's Paris bureau chief, thank you very much indeed for the excellent context around that story. The headline on the Bloomberg, France's gaping budget hole leaves Macron's strategy in doubt. Now, let's focus on and back on the commodity space with a focus on the yellow metal. Gold trading near record highs, holding on to yesterday's gains as investors remain cautious as they await key US inflation data due out this week. Very pleased to say I'm joined now by John Reade, Chief Market Strategist at the World Gold Council. John, thanks for joining us in the studio. Just walk us through then some of the key catalysts that have got to us to this point in terms of the gold price. The rally of what, around 11% over the last year, 7% in just the last month on gold. What is behind this? What's driving the upside?
Well, the last month has seen gold trade dramatically higher because of COMEX speculators on the US futures market have come into the market and amassed some decent-sized positions. But that's just the recent developments. This couldn't have happened if it hadn't been for a couple of other factors in the market, specifically a big increase in central bank purchases of gold that we saw from the middle of 2022. So from the middle of 2022, central banks roughly doubled the amount of gold that they were buying. And that's put a real floor under the price and has allowed gold to shrug off the impact of a strong dollar, high interest rates that would normally be keeping it under pressure.
Okay.
And then more recently, from the start of the year, we'd seen enormous Chinese retail buying. So record amounts of buying of gold on the domestic Shanghai Gold Exchange, record withdrawals of gold from the inventories there. And I think that's really telling a story about the strength of demand in China.
On the central bank question then, does that buying continue? Are they done? What was the rationale for buying up gold in the first place? Yeah. Do you see further buying coming through in the months and quarters ahead? And which central banks are central to this, are really part of this play?
Look, the central bank buying story has been in place, really, since the global financial crisis. They've bought every year since 2010. But the reason for the big increase in the central bank purchases is probably related to, well, the burst of inflation that we've seen, which looks as if it's going to be an issue for the years to come. But also, I think, the consequences of the Russian invasion of Ukraine. When the central bank of Russia's assets were sanctioned internationally, I think it's made a lot of central banks think carefully about what they hold in their reserves. So all the buyers, bar one, have been emerging market central banks. They have, if you look at the amount of gold in their balance sheets, they have the capacity to buy a lot more. So we're expecting to see central bank purchases continue for quite some time to come. And personally, I expect the relatively high or the near doubled levels of purchases could continue for some years to come.
And the China story is really interesting. We just look at the month of January, Swiss exports of gold to China just in the month of January tripling. You talk about the retail demand there. Is that the biggest kind of impulse when it comes to the demand out of China? And again, is that sustainable?
It is the biggest impulse. If you look at how much gold we estimate that China buys, whether it's the central bank and whether it's jewelry and investment, the biggest is the retail side. But one of the biggest changes that we've seen has been the increase in reported purchases by China, which has been going on now for about 18 months. So the Chinese central bank is buying people buying gold jewelry enthusiastically, and particularly retail investment in bars and coins by individuals in China.
Okay, so you're talking about some of the fundamentals that are putting some support under this price, but you also, in your first answer, talked about some of the speculation that's coming through in the markets as well. Does that suggest to you that the pricing where we are now, 2,170 or thereabouts, is looking a little stretched, John?
Yeah, it certainly could be. When you see short-term investors and speculators jump into the market and amass decent-sized positions, you then wonder who's going to buy next. The fundamental markets, as you say, step back a bit when prices go up a lot. So we could pause here. But like everything else, it's going to be very much determined by monetary policy decisions and communications and economic data, particularly out of the US. So if we get some reining in of those relatively dovish Powell comments that we saw at the last FOMC, that could put a little bit of pressure on the gold in the short term. But then again, we'll get the first rate cut come through, whenever that happens to be. That could be a very positive catalyst for gold. Gold generally does pretty well when interest rates are falling. OK, so it brings us to the near-term question, or at least the near-term focus on the inflation data, the PCE data out on Friday, and the speech from Jay Powell in San Francisco, or a part of the San Francisco Fed event. To what extent, how much is priced in when it comes to central bank cuts? How much Fed cutting is priced in to the price of gold at this point, and really how much of a driver could that be? Well, I mean, like every other market, the gold market pays a lot of attention to interest rate expectations. So you could argue it's all priced in. I'd say, though, the uncertainty regarding the timing of the first cut has been hanging over a lot of markets, and particularly a very interest rate sensitive one like gold. I think get the first cut done, and then people will, I think, start to re-engage with gold with confidence that the rate cuts that have been priced in and then priced out will actually start to materialise. Where do you see resistance? Is resistance at 2,200, 2,300? What's the line of resistance for you that you're looking at? When you're up at all-time highs, all lines on the chart are a bit speculative, I suppose. The high has just been above 2,200, so I guess a clear break of something of 2,220, 2,230 might bring some more money in. But for the time being, it is interesting. We continue to see outflows from exchange-traded funds, particularly in the United States. So this hasn't been bought into yet by the broader investment community. It's very much been about the fundamental buying I was talking about, and then the short-term speculators. We haven't seen people starting to allocate more to gold. Perhaps that will come when interest rates start to move lower. OK, and maybe look at a break above 220, 230. John, fantastic to have you in the studio. Thank you very much indeed for the context, the analysis around what we've been seeing in these gold markets. John Reade, Chief Market Strategist at the World Gold Council. Coming up, the single greatest day for Donald Trump's wealth. Didn't think we'd be saying that, did we, at the start of this week? How the former US president's net worth has ballooned to $6.5 billion, and largely just over the last 24 hours or so. We bring you the details next. This is Bloomberg. Welcome back. 6:46 here in the city of London. Happy Tuesday. 24 hours ago, all eyes were on whether New York State would begin seizing Donald Trump's assets. Seizing his assets as a deadline passed to post a bond of around $500 million. But overnight, the former US president's wealth, it has ballooned to $6.5 billion. What happened? Let's bring in Markets Today co-anchor Kriti Gupta for the details. Kriti, what did happen? How did we get to this point? That's quite a turnaround in the space of, 24 hours for Donald Trump?
I mean, fortunes can truly change on a dime, can't they? I mean, this is really fascinating because everything kind of aligned for Donald Trump here. At first, he had the state appeals court that came in and said, actually, we don't need you to pay the $454 million. You can only pay $175 million, which some would call a discount when you talk about this major payment. That actually worked in his favor as well. At the exact same time, you had his SPAC merger get completed. This is, of course, Trump Media and Technology Group, that has been in the SPAC process since 2021. That IPO kind of frenzy that we had, the Trump Group got in on it. It just hadn't completed until literally yesterday in the 11th hour. What that does to his fortunes is not only make it easier to actually pay that bond payment, but makes him one of the 500 richest people in the world, according to the Bloomberg Billionaires Index. And that really comes to the fact that his kind of 56% share in the company is now not worth virtual money. It's worth actual stock. What's significant, though, is that those shares are locked up for about 6 months. So he can't actually cash out on it yet, but he can in 6 months. And that emphasis has meant that he can actually pay his debts. He actually can pay his liabilities. And it's creating a little bit of a cushion for him. A little.
So how much cushion? He's got that lockup period, as you say, for 6 months on the SPAC. Where are we in terms of his financial affairs? Is he in the clear at this point?
He's not in the clear just yet because, look, this is just one of many. In the last 24 hours, yes, his fortunes have changed, but then his criminal trial date was also set as well for April 15th, which is only a couple weeks away as well. So he has a net worth increased by about $4 billion. But again, a lot of that is kind of rolled up in stock. So now the question here is, can he actually afford some of his legal affairs? I think from a broader political kind of standpoint and from a global standpoint, one of the concerns 24 hours ago was simply, do you need some sort of rich billionaire or foreign government to kind of help pay off the bond payment? Would that violate some sort of campaign finance rules? That seems to be off the table now because it's not a big enough amount for him to kind of risk skirting those lines. In fact, his fortune now estimated about $6.5 billion. That's expected to get him through at least this particular court case. OK, that's a turnaround in the fortunes. We look ahead to the next court case, of course, around April the 15th, I believe, in that hush money trial, at least those allegations. Kriti Gupta, thank you very much indeed. Of course, Markets Today co-anchor with the detail there on former President Donald Trump, of course, the contender for the Republican Party in November, and his financial fortunes. Switching focus now, but still with a line on what is happening with these elections, because this links in. New Zealand has joined the US and the UK in accusing China of cyber attacks targeting democratic institutions, saying its parliamentary network was breached in 2021. Let's bring in Bloomberg's Rebecca June-Wilkins for the details on this then. What are the key details, what are the key allegations coming through from the US, the UK and now New Zealand, Rebecca?
Well, the focus has been on this group called APT31. So that's the term that has been ascribed by the security community. And the allegation essentially is that this is a state-sponsored, a state-linked group of hackers that have been targeting specifically lawmakers, parliamentarians, as well as voter data in the UK. And we have seen in response this sort of flurry of sanctions, as well as quite a coordinated response, it seems, from the UK initially, then the US weighing in, now New Zealand, follows up, of course, on some of the alarm that had been raised by that Five Eyes committee back in last year in October over concerns that the Chinese were sponsoring and were presenting a very serious cyber security threat to specifically the parliamentary procedures.
Rebecca, talk to us. You touched on this, but how other countries are weighing in then on this alleged issue?
Yes, well, I will say, I mean, China itself has been very, very firm to resist this. We have now had statements from Beijing, from the embassy in Washington, as well as the embassy in the UK as well. Spokespeople on behalf of Beijing have said that these accusations are groundless. They actually say that China is the biggest victim and the biggest target of some of these cyber security acts. But it's worth just noting the timing here, because all of these allegations, and from the US, that includes that US companies have been targeted too. All of this is actually coming as foreign companies are being wooed in a series of events, the China Development Forum, the Boao Forum in Beijing, including a spate of US or a series of US company executives who were encouraged or somehow extended their trip in order to have a meeting with top-level officials.
Yeah, and we know the measures that most of those executives take to ensure their own cybersecurity when they are on the ground in China. But as you say, really, really interesting timing. So China coming up with a very, very firm denial of these accusations. How do you see this unfolding from here, Rebecca? Does it put another dent in the relationship that is also, of course, already extremely challenged? And how are we thinking about the votes in the US and here in the UK and how that ties in?
Well, I think certainly what appears to be quite a sort of scripted or at the very least coordinated response here from some of the Five Eyes allies suggests that this is not the end of, their pursuit of trying to tackle some of these goals. We've seen, of course, those 2 sanctions on individuals as well as on a company based out of Wuhan as well. There potentially we could see more of this. We could see more specific allegations coming out of this that might make that detente that we've seen between the US and China over the last few months a little bit more fragile, a little bit more compromised. The timing is certainly inconvenient for Beijing as it tries to woo back FDI. That, of course, fell to a 30-year low last year for 2023. And Beijing, of course, trying to get its economy back up and running, trying to restore confidence among that foreign investor community, in particular, that China is a safe place for them to be.
OK, Rebecca Chun-Wilkins with the details on that really fascinating story around the hacking allegations coming through from the US, UK and New Zealand in terms of the China threat, as they allege, of course. Rebecca, thank you very much indeed. Plenty more coming up. We're going to get a little view on the BOE and market pricing on that central bank and a little bit more detail on the foreign domestic inflows into China, how those have slowed. That's coming up. This is Bloomberg. Welcome back. This is Bloomberg Daybreak this Tuesday. Now, we've been talking about the fact that China's rolling out the red carpet for CEOs from the US and elsewhere, wooing them with this charm offensive in Beijing at the China Development Forum. President Xi Jinping is expected to meet with some of them later as well on Wednesday. And this is the reason for it, because foreign direct investment in China has fallen off a cliff. In 2023, it fell to the lowest levels in about 3 decades. You can see that slump in FDI into the Chinese markets last year, and it fell again in January and February as well. That is the concern for Chinese officials. They want to reassure these executives from the likes of Pfizer, from the likes of Apple, that this is still a place they can do business. It's still a place that they should invest. We'll see if that actually plays out. Let's flip the board and quickly look at what's happening on the central bank story, because a really interesting development in the money markets now, starting to price in a higher chance that the Bank of England will cut in May than the ECB and the Fed, given the comments we heard from Andrew Bailey about cuts now being in play. Bit of pushback from the MLive team suggesting it's still unlikely given the stickiness of inflation in the UK, but nonetheless an evolution that is interesting to monitor. Coming up, we're going to speak exclusively, by the way, to Catherine Mann, of course a member of the Bank of England's Monetary Policy Committee, a more hawkish member. You can catch that exclusive interview on The Pulse, 9 a.m. UK time. Before that, though, tune in to Markets Today. That is next. This is Bloomberg.